Chevron's overall oil and gas production rose during the quarter, and profits in its U.S. exploration business jumped 15% from a year earlier. But weakness in refining and international exploration knocked overall profit down 27% on a 6.8% decline in revenue. Earnings declined from a year ago largely due to lower crude oil prices and weaker downstream and chemicals margins, said Michael Worth, Chevron Chief Executive Officer. Worth signaled that Chevron considers itself on track to make a deal for Anadarko. He said combining the shale, deepwater and liquefied natural gas businesses of the two companies will unlock significant value to shareholders. Chevron's daily production of oil and gas rose to billions of barrels, from billions of barrels in the year-ago period. But the price for each barrel of U.S. crude oil and natural gas liquids fell to $48 from $56 a year earlier. Chevron's take from international output slipped to $58 per barrel from $61 a year earlier. The lower prices and weakness in refining impact dropped first quarter net income to $1 billion, or $1 per share, from $1 billion, or $1 per share, a year earlier. Revenue fell nearly 7% to $35.2 billion from $1 billion a year ago. Rival ExxonMobil Corp on Friday reported its earnings were well below analysts' estimates, citing the effects of weaker crude prices, heavier maintenance and weaker margins in its refining and chemicals businesses. Exxon shares were off 2.4% at $1 in pre-market trading.